Residential and commercial real estate investments are distinct asset classes with different characteristics, risk factors, and investment strategies. I'm Jeremy with eXp Commercial, and today we're going to discuss the 5 key differences between residential and commercial real estate investments. One of the first key differences between the two is the purpose and use. Residential real estate is primarily used for housing purposes. Residential properties include single-family homes, multifamily units, condominiums, and apartments of 4 units or less. The main source of income for investors in residential real estate is the rental income from individual or multiple dwelling units. On the other hand, commercial real estate is designed for business purposes. Commercial properties encompass office buildings, retail spaces, industrial facilities, and hospitality establishments. The income generated in commercial real estate often comes from leasing space to businesses or organizations. Next, we'll discuss how income is generated through these different investments. In residential real estate, the primary source of income is rental payments from individual tenants. Investments are typically geared towards providing housing solutions, and rental income stability is influenced by individual lease arrangements with residential tenants. In commercial real estate, income is often derived from lease agreements with businesses or organizations. Lease terms are typically longer, and income may include base rent as well as percentage of tenants' sales. The structures of the leases are another important distinction between the two. In residential real estate, lease agreements in residential properties are typically standard and focus on individual or family occupancy. Lease terms are generally shorter compared to commercial leases, and the leasing process is often more straightforward, where commercial leases are complex and can vary widely. They may involve negotiation of terms such as base rent, operating expenses, lease duration, and tenant improvements. Commercial leases often have longer terms, providing greater stability for investors. When it comes to operational management, the management of residential properties involves dealing with individual tenants, handling maintenance requests, and ensuring the overall well-being of the property. The management scale is often smaller compared to commercial properties. In commercial real estate, managing properties can be more complex, involving interactions with businesses, handling larger spaces, and addressing unique situations such as tenant build-outs. Property management in commercial real estate may require specialized skills and expertise, and often requires a different type of license. Lastly, we'll get into the market dynamics and risks. Residential real estate tends to be influenced by local demographic trends, economic conditions, and housing demand. Market dynamics can be affected by factors such as population growth, employment rates, and interest rates. Whereas to commercial real estate is often more sensitive to economic trends and business cycles. Factors like job growth, corporation expansion, and industry trends can significantly impact the demand for commercial properties. Commercial real estate may also be subject to market-specific risks such as changes in consumer behavior or technology disruptions, such as AI. Understanding these key differences is essential for investors to make informed decisions based on their financial goals, risk tolerance, and investment strategies. Both residential and commercial real estate can offer attractive opportunities, but each come with its own set of considerations and challenges. If you have questions and you are interested in learning more about commercial investments, you can give me a call at 702-232-0179, and I will be more than happy to discuss more with you. Thanks for watching. I look forward to connecting with you soon.